Hello and welcome back. In this lesson we are going to look at our second syllabus area, which is capital gains tax. I told you that there are different syllabus areas and they are not chapter names, they are syllabus names, and so we are going to look at the second biggest area, area of the syllabus, which is capital gains tax. The previous tax which we studied was income tax. Income tax is paid on the income which you earn and you have to pay tax on that. Whereas capital gains tax is a tax which you pay on the gains which you make. Now, gain is simply another name for profit. So the profit which you made. Now, profit is not trading profit, it is another profit, that's why it is called gain. A gain could be earned like if you sell any property, if you sell a piece of land, if you sell any other asset and you made some gain on that, you made some profit on that, then that would be chargeable to capital gains tax. A rate of tax, there was tables given, there were different banding as far as income tax is concerned. If you know, there was starting rate band and a basic rate band and higher rate band. Now them bands will also be considered in this tax as well. But however, first we will use the band for income tax, then we will consider the income of capital gains tax, then that income will be considered. Say for example, if you have income tax, if you have employment income of £20,000 and you have £40,000 of capital gains tax, now the first £20,000 employment income of £20,000 will use the first bands, then we will consider the capital gains tax 40,000, and then that would come into the higher rate band or whichever is remaining. So first we will use the first banding. We will use the banding first for the income tax, then we will use the banding for capital gains tax. So that is the way it works. Alright? Tax rates as far as capital gains is concerned. If you remember from income tax, tax rates for 20%, then it was 40%, and some cases it was 45% as far as non-savings is concerned, and it was different for savings and it was different for dividends. However, as far as capital gains tax is concerned, there are standard rates here. So you don't have to worry about different things. So tax rates for capital gains tax will be given to you in the exams. So for basic rate band it is 18%, and for higher rate band it is 28%. These will be given to you in the exam anyway, so even if it is different than that, so you don't have to worry about it. These are just rates which will be given to you in the exam. Alright, now this is capital gains tax. We have to pay on the gains which you make when you sell an asset. Now how can we do that? It is simple calculation. We take the sale proceeds, right? First of all, we take how much we sell it for. Say for example, it was a piece of land. If I sell it, how much did I sell it for? It was £200,000. Now when I was selling it, did I have to incur some expenses to sell it? Say for example, if an agent was involved, if someone was involved within selling it, someone helped me to sell it and charged me some money. If it happened like that, then I will have to charge that expense as well, because it was selling expense. Now when I bought the asset, that was my cost when I bought my land, so I will have to deduct that cost out of the sales. Alright, now if I incurred some expenses on that land, say for example, if I incurred some expenses on that piece of land to make it useful or to make it more marketable, then that would be my expenses as well, so I will deduct that expenses as well. Alright, so after that, that would be my gain, that would be considered my gain, that would be my profit, and I will have to pay tax on that. If you remember from your income tax, there was something called personal allowance. The personal allowance was the amount. Up till that you don't have to pay any tax. If you remember from a previous lecture, I think I mentioned you that in income tax we get personal allowance, whereas in capital gains tax we get something called annual exemption amount, which is £11,000. In income tax it was 10,600. In capital gains tax it is 11,000. You don't have to remember it, you will be given it in the exam anyway. Alright, so first we will deduct the annual exemption amount, and whatever the remaining is, we will have to pay tax on that. Now capital gains tax, as far as income tax was concerned, that was from individual's perspective. We didn't consider any companies. However, we did consider companies in national insurance, but we did not consider anything else. When we come to capital gains tax, we have to pay capital gains tax if we are individuals. If we are companies, then we will have to pay capital gains tax as well. So capital gains tax applies for both companies and for individuals. All right? Now this annual exemption amount which I mentioned, which is £11,000, up till that you don't have to pay any capital gains tax. This is only available to individuals. It is not available to any companies. So if you are an individual, you will get annual exemption amount. If you're not an individual, you won't get any capital allowance. Apart from this annual exemption, which is I told you £11,000, you will get different reliefs as well. So we will deduct them reliefs as well. If they are just exemptions, we will deduct them. And then if any other type of relief is available, then we will deduct that as well. Now one important relief which we will study in this one is there is some different rate on that. I told you that there are two different rates, which is 18% and 28%. One relief is part of capital gains tax. If you are eligible to that relief, your tax rate would be 10%. We will see in a minute. So there are only three tax rates involved as far as capital gains tax is concerned, and you don't have to remember because all of these will be given to you in the exam. All right. So let's move to our capital gains tax then. Here you go. I have already shared the screen with you. That is our capital gains tax on page 43. And it says above that there are few chapters involved from chapter 11, 12, 13, 14 and 21. So this is our capital gains tax. First of all, we have to take sales, then incidental cost of sale. This is commission fee or agent fee. Then it says cost, and if any enhancement expenditure is incurred, enhancement expenditure which when you bought this land or when you bought an asset and you incurred some expenses on that to make it more attractive or to make it useful, then them are called enhancement expenditure. And whatever the remaining is, it is loss. It is gain. It is gain, but it could also be loss if your costs are exceeding the sales price. All right. Now it says where sales. Now these are the definitions. You will have to read it yourself. It says sales, then it says incidental cost of sales, and then cost, enhancement expenditure, blah blah blah. After that, it says annual exemption amount. Now, annual exemption amount is personal allowance of capital gains tax. Now, personal allowance of income tax was 10,600, but you don't get personal allowance in capital gains tax. What you get is called annual exemption amount. So, annual exemption in capital gains tax is £11,000 for tax year 15-16, which is our current tax year. Annual exemption is given to individuals to calculate taxable gains. Companies do not get annual exempt amount, as I said to you earlier. Right? Now it says capital gains tax payable by individuals. How would they pay? I already explained you that first they will have to consider the banding. The banding is exactly the same which you saw in income tax. So it says first the income tax bands are used to calculate income tax. Any unused bands are used to calculate capital gains tax. Capital gains tax is 18% up to basic rate band and 28% above basic rate band. CGT is paid by 31st January after the tax year. The due date to pay CGT is 31st January after the tax year. So if our tax year is 15-16, due date would be 31st of January 2017, which is 31st January after the tax year ends. Our tax year would end on 5th of April 2016. Next 31st January would be 31st January 2017. Alright? Now if you go to next page, it tells us the exempt assets. Now these are the list of assets on which you don't have to pay any capital gains tax. We're not talking about income tax. We said we studied some sort of incomes in our income tax on which we don't have to pay any income tax. Whereas these are the list of exempt, these are the list of assets on you don't have to pay any capital gains tax. What are these? These are cars, or ISAs, national savings certificates, gilts, and qualifying corporate bonds. Now, I cannot feed it in your mind. You will have to remember them and memorize them because these are very, very crucial. As far as F6 is concerned, as far as P6 is concerned, these are not as much important as in F6, but these are still important. All right. Now, this lecture, as I am giving you, this is both relevant for F6 and P6. So even if you are watching it for P6, that's fine. If you are watching it for F6, still it's fine. It is exactly the same thing. Then after that, excuse me, it says transfer between spouses. Now, if I transfer any asset from my side, if I had a, say for example, any asset, if I had a laptop and I give it to my wife, that would be at no gain, no loss. So if I bought it for £2,000, even if market value is £5,000, that would be considered at what I bought it for. So how much I bought it for? I bought it for £2,000. So I'll take the sales proceeds, £2,000, and the cost is £2,000. So no gain, no pain. All right, no gain, no loss. Then after that it says, now if you could please read that, it says each spouse is taxed as separate individuals. Disposal of asset between spouses give rise to no gain, no loss, as transferee is assumed to take over the asset at its cost. When the asset is eventually disposed to someone else other than a spouse, then the gain is calculated based on the original cost of the purchaser, not the transferor. Now, say for example, if I give my laptop to my wife and she then gifted it to someone else, then in that disposal, original cost will be considered and not the transfer's cost, original cost of purchase. After that, it says part disposal of assets. Now, part disposal of asset is simply means that when you are transferring an asset, you are not transferring complete asset, you are just transferring part of an asset. So, for example, if I had a land, now land could be of, I could have a huge piece of land. Now, I did not transfer all of the land, but I did transfer 1/5 of my land to my someone else, to my friend or someone. What would happen if I just transfer part of the asset? This is called part disposal. How to calculate the part disposal? Now, you will have to take sales proceeds, but how to calculate the cost? If an asset is part disposal, then the allowable cost and enhancement expenditure for capital gains calculation will be calculated as follows. Now, the formula to calculate is A over A plus B, where A means market value of the part disposed, which would be our sales value, and B means market value of the remainder part, which I did not sell. Say for example, if I had 4 hectares of land and I transferred 2 of them, then whatever I am transferring is A, and whatever I am retaining is B. So in the formula. So formula is A over A plus B multiplied by the cost, and it will include the enhancement expenditure as well. Excuse me. Alright, so that is the way to calculate if there is any part disposal. I told you that while I was explaining that we'll take the sales, then we'll deduct the cost, then our remaining would be our gain or loss. If it is a gain, then we will have to pay capital gains tax. But before we pay capital gains tax, we get our annual exempt amount. After deducting annual exempt amount, we will have to pay tax. Which tax? Capital gains tax. Now, there are 2 rates of capital gains tax. One is 18% and other one is 28%. But I also told you that there is one relief. If you are eligible for that relief, you will have to pay a reduced rate, which is 10%. Now, that relief is called entrepreneur's relief. Here you go on the screen, entrepreneur's relief. How can you get it? Entrepreneur relief is available on the gains of following. Excuse me. Disposal of whole or part of a business owned at least for 1 year before disposal. Now, if I hold a business, alright, if I have a business and I own it for 1 year, and if I sell it then it would apply. Entrepreneur relief would apply. Now, the business is sold as going concern. I am not selling it the pieces of the shop. If I own some shop, I'm just selling it as going concern. So someone who is buying will carry on the trade. So if I dispose my business, which I am owner of, if I sell it as going concern, then I will be eligible to get the entrepreneur relief on that. The second one says disposal of one or more business assets at the time when the business ceases, owner owned at least for 1 year before disposal, and the asset is sold within 3 years of the trade of cessation. Now, if I do not give it as going concern, then I can give the pieces. I can sell it on piecemeal basis. So if I have a shop, then I can give. Say if there was an air conditioner, then I sell the air conditioner to someone else. If I want to sell this business, I can sell iPad to someone else. I can sell my suit. I can sell this whiteboard and marker and laptop and cameras and everything. Right? So if I sell it to different people, then I can do that as well. Disposal of one or more business assets at the time when the business ceases. Now I can only sell when I am going to cease the business. And I must have owned it for 1 year before disposal, and asset is sold within 3 years of the trade of cessation. This is another condition to be eligible for entrepreneur relief. Now if I am eligible for entrepreneur relief, the tax which I will pay will be on 10%, so which is reduced rate. How much I am saving? If I am basic rate band payer, I am saving at the rate of 8%, because I should have paid 18%, whereas I am paying 10%, so I am saving 8%. If my income is coming, my capital gains are in higher rate band, then how much I am saving? I am saving at the rate of 18%. How? Because I should have paid 28%, but I am actually paying 10%, so I am saving 18%. So that is very, very important, especially from planning point of view. Alright, then after that it says disposal of shares in a personal company. A personal company is a company of which you have 5% shares. An individual is an officer or employee of the company. Now, personal company is a company, as I said, if you hold 5% or more shares, and you are an officer of that company or employee of the company, then that is a personal company. So you own it personally. Then it says the company must be a trading company. Shares disposed must be owned for 1 year, at least 1 year before disposal. Now these are the conditions that you will have to learn in order to be eligible for entrepreneur relief, and these are very, very important as far as capital gains tax is concerned. And after that it says CGT rate is 10% on the gains qualifying for entrepreneur relief. For tax planning purposes, if you just see beneath that, tax planning for capital losses and annual exemptions. Excuse me, it's very, very important. Please make sure you read it carefully. Now, capital losses on assets must first be set off against assets not qualifying for entrepreneur relief. Now, we have learned the losses. We know what losses are. We know trading losses, but there are something called capital losses. Capital losses are simply losses which you made on capital assets. So, say for example, if I've sold something, piece of land or a laptop, but I incurred a loss, that is a capital loss. Now, capital loss can be set off against future capital gains. Now, while setting off against future capital gains, you have a choice. While making the choice, please make sure set it off against the assets which are not qualifying for entrepreneur relief. If you set the losses against the assets which are qualifying for entrepreneur relief, I hope that you will appreciate the fact that you are saving less tax, because you would have paid tax at the rate of 10% in that. But if you are setting it off against the assets which are not qualifying for entrepreneur relief, then you are saving more tax. Alright? Then after that it says annual exemption must first be set off against gains on the assets not qualifying for entrepreneur relief. Likewise, when we are considering the annual exemption of £11,000, please make sure you set it off against the capital gains which are not qualifying for entrepreneur relief, because that way you are saving tax on higher rate, whereas if you set it off against assets which are qualifying for entrepreneur relief, you would be saving less tax. Alright? That is our end of this introductory lesson of capital gains tax. As I said, this was a lesson which was relevant for both F6 and P6. So even if you have watched it for P6 or F6, in both cases it is fine, because it is exactly the same thing for F6 and P6. Alright, that's it for now, and I will see you in the next lecture with more bits and pieces of ACCA taxation. Thank you and goodbye.